Cantor Exchange Tradologic Interface Basic Chart Interactions. In this video, you will learn how to maximize your chart to full screen mode, how to add an indicator, how to change your visual price representation, how to add a trend line, how to change your chart colors, one basic strategy to get you started, and here's a required U.S. government CFTC disclaimer. Read it and understand it. And stay tuned. There are many ways to customize many features of your charting interface. I will cover a few today. The first one I will show you is how to maximize your charts. All you have to do is click this button right here. This will take you to full screen mode. If you want out of full screen mode, just click the escape button. It'll bring you right back. If you would like to add an indicator or some type of study to your charts, you can do this as well. Click the button labeled Indicators. It will open up a list of many different indicators that you can choose from, and we will choose one right now. I will choose the Relative Strength Index, otherwise known as the RSI. Now, as you can notice, my RSI is somewhat hard to see. However, I can change that by right-clicking on the indicator, going to Format, and just changing my colors. If I want to zoom in or out, I can do that through these buttons right here. And now I've got a better picture on what it is that I'm looking at. If I want to add another indicator, I just click on Indicators. Let's search for one. Moving average. Here's our moving average. If I want to change it, I can just click on it, go to Format, and change the color. To delete the indicator, I can just click the X up here. I can click this X, and we will go back to normal. There are many ways to change your visual representation of price. If you want to see Japanese candlesticks, that's what you're looking at right now. If you want to see bars, you can look at that here. You can see hollow candles. You can see a line graph. You can see an area graph. You can see a Heikin-Ashi chart. Personally, I like candles, but you can customize them all. There are two ways to customize your candles. First, you can right-click on a candle and go up to Format, and you can change your colors, or you can go click on the chart properties and you can do it through here. We're just going to right-click on a candle and we're going to change the colors. So as you can see, you can have any color scheme that you would like. You can change your price line thickness. Watch this price line here. There are many options to choose from. You can change from your regular price scale to a percentage scale, to a log scale. You can put it on the left axis or on the right axis, or none. You can change the background color of your charts. As well as grid lines, horizontal grid lines, your text scale, how large you want your text. You can put watermarks on here. You can change your crosshair color. Go through here and start playing with your settings. If you want to go back to defaults, you just click this little button, Defaults. How to draw a trend line. You can click on the button that says Trend Line, click on point number 1 and point number 2, and you can draw a trend line. You can do this as a horizontal trend line. You can do it as a vertical trend line for, say, a time. And that's how you can draw a trend line. You can also change the look and feel of your trend line. You can change the color. You can change the thickness. You can change whether it's dotted or not. Right there. And you can change just about any attribute that you want to draw a trend line. To take a trend line off, just click on it and click Delete. Trend lines can be useful, and I will show you how. Trend lines have three main purposes: to show support, to show resistance, and to show the overall direction of the trade. If I were to click here and pull my trend line down and connect two dots, 2 points where price touches the trend line, and I can do the same on the bottom, and I can form a little channel here. Now, through the recent history, price has been trading in between these two lines. When price breaks out of one of these two lines, something may occur. Price may begin to rise, or if it breaks down to the bottom, price may begin to fall, or price may touch the line and pop back up. Price may touch the line up here and pop back down. One other customization you need to know about is you can move your charts around by just clicking on the chart and moving it. If you click on the right axis, it's going to move your charts up and down. If you click on the bottom axis, it's going to move your charts in and out. I'm going to be talking about two different strategies. One is called OTM and one is called ITM. Now, an OTM trade means out of the money. You see where the blue line is? That's the strike. This particular strike only costs 33 right now, 33 cents per contract, which means price has not moved up there yet, so you can pick that up rather cheaply. It doesn't cost you a full 50 or 85 or anything like that. It costs 33. It's an OTM trade. Another strategy is called ITM, in the money. This one's going to cost you more if you're buying. Right now you can pick it up for 81. It will cost more than an OTM because price is already in the money. If price were to expire right now, you would win your trade. Price has to move and close below this strike for you to lose your trade. So price has to move for you to lose. If it just sits there, or if it moves up, or even if it moves down a little bit, you're still going to win your trade. An OTM trade, let's choose this one, 37. An OTM trade, you're paying less, but price has to move for you to win. An ITM trade, you're paying more, but price can sit there and not move, and you will win your trade. Sometimes you can use third-party applications, such as the Tradobot Marketplace tool suite. This will show you probabilities of where price has been and where price may go. It's very customizable. You can take a look at that at Tradobot Marketplace. It's what I use every day. Here is one more simple strategy using the RSI. You've got what they call an overbought limit at 70 and an oversold at 30. However, it's kind of turned around on its head because when price is in overbought territory, it tends to rise a lot faster. And when price is in oversold territory, it tends to fall a lot faster. For instance, when price reaches up to this point, right here, price continued to rise. Again, here, price reached up to this oversold area and price continued to rise. Right here, price reached up to the overbought area and it did a little pullback, but then it continued to rise. And right here, price reached overbought and it continued to rise. This may give you just a little insight on what you may want to do next, how you may want to trade using an indicator. That's all for now. I will see you in the next video. Thank you.